if you're watching Bitcoin, focus on the adoption, focus on the disruption, focus on the price may be up and down, up and down, up and down, but the number of wallets over the past decade, it has increased. If you look at other cryptos from Ethereum and the other L1 chains, also adoption, the wallets that have been in it also have started to increase, and the applications that have built on top of it have started to increase as well. Hey guys, so by the time I'm making this video, Bitcoin is below the 42,000 mark, and we've seen it down around 10.69% for the past 7 days. Ethereum is around 3,200 and it's also down 12.99% for the past 7 days. BNB is around 454 and it's down 11.66% for the past 7 days as well. You have Solana at 146, down 14.79%. Cardano at 1.24. Polkadot at 25.3. Avalanche at 87. Terra at 70. And Polygon at 2.12. We have the largest tokens and coins down over the past few days. And in this video, I want to explain why majority of the tokens and cryptos are down. And I also want to talk about the charts first. By the time I'm making this, Bitcoin is at 41,820 and it's below the 42,000 mark. But what I want to submit to all of you is, regardless of its movement as of today, it's below significant moving averages. It's below the short-term 25-day moving average. It's also below the 99-day moving average. And it's also below the 200-day moving average, which is one of the longer ones and the stronger ones. And please do note, for those who attended our Stock Smart sessions, if you remember it, that the longer the support, the stronger it is. And the longer the resistance also, the stronger it is as well. And we are below the longer and stronger moving averages, denoting from a price standpoint a more bearish undertone. Above and beyond that, I want to talk about the MACD, which, if you try to look at it very, very well, since dropping below the zero line cross last December, we've seen it not go up still, and it's confirming whatever bearish move that we have as well. And if you're going to draw a trend line, right here, you're seeing highs starting to slope downward, confirming also a downward trending slope. From a technical analysis point of view, that's a textbook definition of a downtrend. And if you're gonna plot it, it started somewhere around November 2021 to where we are today. One glimmer of hope though, for those who are asking that, will the sell down continue? It's already oversold. That if we see Bitcoin stay and hover above these levels, there's a possibility that it may consolidate for the short term. Should it bounce, there's a possibility that it could attack resistances at the 45,000 mark. That being said, if it does not hold current levels, there may be a support next at the 38,000 mark. That's from a technical analysis point of view. And please do remember, every time I talk about technicals or every time I talk about any other crypto here, please do your own due diligence. Please take the time to study it. Please take a deep dive. Don't buy something just because someone talks about it in YouTube or your friend tells you to buy something. It's your money, it's your responsibility. Please take the time to learn and know what it is as well. I want to talk about the biggest drivers on why it's actually down. Number one, front and center, all of what you're actually seeing, in my opinion, is based on what's going on in the Fed. Primarily because the Fed meeting revealed that they were planning to raise rates sooner and faster than what everyone expected. Please do note that since the drop in March 2020, the Fed kept on printing. Its quantitative easing was so massive and crazy that they just kept adding and adding and adding liquidity into the markets, which led into the US stock market and which also went into the cryptocurrency market. And that's why we saw a lot of assets start to push up. And that being said, if it gets tapered down, if you see it actually stop, the printing stops, then the liquidity that got ushered into the stock market and the crypto market gets sapped. And please do note this, market caps are higher right now in 2022 as compared to different points in 2019 and 2020 as well. That actually means that if there's not a lot of money moving in, it will take a harder time for it to actually go up as well. And if you add everything to the mix, also possibility of higher interest rates, higher inflation, tapering, no printing or less printing at all, that also denotes a more bearish sentiment into the market. So it's not just that there's a possibility that lesser money would flow, but that alone signals a more bearish undertone for the broad market in general. And that's why the markets were generally down. It doesn't mean though that technology for Bitcoin changes. It doesn't change anything. And you can check the fear indicator meter for Bitcoin, and the more fearful it is, the lower price gets. And for those also who are long-term hodlers and stackers and who believe in the technology, it's an opportunity also for those type of people to stack at certain prices because they're generally lower. And I've been saying this all the time for people who believe in Bitcoin and the technology of it. If you like it at 69,000, then you have the ability to actually get it cheaper at 41, 42, even at 40,000. The lower it gets, the cheaper it is. The lower it gets, it doesn't change the technology. And I'll say this over and over, if you're watching Bitcoin, focus on the adoption, focus on the disruption, focus on the price may be up and down, up and down, up and down, but the number of wallets over the past decade, it has increased. If you look at other cryptos from Ethereum and the other L1 chains, also adoption, the wallets that have been in it also have started to increase, and the applications that have built on top of it have started to increase as well. While all of this was happening, there was a lot of negative volatility in the US markets, and there's a lot of talk about Bitcoin being the end-all be-all hedge. But for the short term, I really believe that it's highly connected to the US stock market. So where the US stock market goes for the short term, if it's down, it impacts also the crypto market in general. But that being said, another thing that caused it, I'm not sure if you've seen it in the news, there's a lot going on in Kazakhstan right now. There's protests and rallies there, but because of that, the internet in that area was shut down. And why is this relevant to crypto? I'm not sure if you remember this, but at some point last year I was talking about China mining, and because of the ban of mining in China, a lot of the mining moved to the US, which right now, by the time I'm recording this, the largest mining facility in the world is in the US already. However, number 2 is in Kazakhstan. North America, Kazakhstan, common denominator, cold countries, which is better for those who are mining cryptos. The colder the country, the better it is as well. Because of what was happening there, internet was shut down, hence mining was also shut down in that particular area. So for the short term, as you all know, when you shut down mining, it affects the hash rate. And if you've been following the videos that I created, the price of Bitcoin somehow correlates to how the hash rate is. So if hash rates are down, it would also hit the price of Bitcoin downward as well. A couple of things can arise from this. Should everything be resolved in Kazakhstan, then you see mining go back. As mining goes back, hash rates would go back. Or similar to what happened in China, there could be a possibility and a narrative that while all of this is going on, or if there's too much uncertainty, a lot of those mining operators might actually think and want to go to the US and start their mining operations there. While all of this was happening, I just want to share also that there was a ton of liquidations. There was a day where there was around 800 million that got liquidated, and that would also be a narrative how futures would play out. You would see drops highly correlated also to a ton of liquidations that's happening in the futures market. In everything that's going on in crypto, there will always be volatility. Volatility will always be part of the game because it's so new. And that's why it's very, very important that you know what you're getting into, that you get to define also if you're actually a trader or an investor. And if you're a trader, you get to define areas on your triggers to come in, your triggers to come out, regardless if it's a winning trade or a losing trade. And also if you're an investor, it's highly important also that you also define the reason, the rationale of why you are in that investment and the thesis behind it, the reason why you're buying it. Because if the price drops, the thesis does not change, that's where you would have to also follow your conviction. And if you're feeling uneasy about this volatility, revisit your conviction, revisit the amount of time that you have spent to learn more about that crypto project. Because if you're scared, it actually means that you need to study more because you're unsure about the project that you've entered into. And second, if you have your conviction right, but you're still uneasy, that means you exposed an amount of money that you should not have exposed, and that means that you actually have to lessen your exposure. In my opinion, what causes investors to be uneasy is that they place money that shouldn't be there. And I'll say this all the time, every time you invest, it always has to be an amount of money that you're willing to take on the volatility, something that you don't plan to touch for a very, very long time. And from my perspective, every time I invest something, I would always think about that. Should this go to zero? Am I okay with it? And I think those are questions also that you need to ask yourself, that should it go to zero? Are you okay? If the answer is no, maybe you should revisit your allocation. So I hope you guys got a lot from this. I hope that this was something that was insightful and gave you clarity about what was happening in the markets over the past few days. If you guys have any questions, put it in the comment section below. I'll try to answer them. Please remember also, if there's someone asking you to inbox them, or if you receive a DM from a Marvin Germo account, regardless if it's in Facebook, Twitter, Instagram, etc., whatever platform that's there, that's not me. Those are scammer accounts. I will never message you directly. I also don't give away free Ethereum or Bitcoin if you send it to a particular address. That's not me. Please be careful about that. And if you'd like to know more about technical analysis, we have a pre-recorded Zoom course. Check it out in the description below. I also have books to teach you about technical analysis in the stock market. It's in the description below as well. And we have a lot of things in store for you. Check it out if you want to invest in cryptocurrencies. We have brokerages below. If you want to invest in the US stock market for $1, it's all available down below for you guys. And if you have not subscribed yet, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.